Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Parsons Corporation Annual Report. Parsons Corporation offers a wide range of businesses and services to its customers worldwide. The company's Federal Solutions segment provides critical technologies such as cybersecurity, air and missile defense, intelligence gathering, electronic warfare, space ground systems, geospatial and signals intelligence, environmental remediation, border security, and biometric solutions. In addition to these technologies, the Federal Solutions segment also offers software and hardware, technical expertise, satellite ground system support, flight dynamics, data fusion and analytics, platform system integration, directed energy, joint all-domain operations, command and control systems, digital landscape services, electronic warfare, multi-domain operations, mission support, and cyber solutions. The Critical Infrastructure segment of Parsons Corporation focuses on developing digital solutions for various industries such as aviation, rail and transit, bridges, roads, highways, and urban destinations. This segment also provides planning, engineering, and management services for complex infrastructure projects including bridges, tunnels, roads and highways, water and wastewater systems, intelligent transportation systems, utilities, environmental remediation, emerging contaminants, aviation, and rail and transit. Furthermore, the Critical Infrastructure segment offers multidisciplinary design, technical, and management solutions through Parsons X, a digital transformation organization. Overall, Parsons Corporation's diverse range of businesses and services makes it a leading provider in the fields of federal government contracting and critical infrastructure development. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to drop. The decline of a company's stock price is often a complex issue with multiple contributing factors. One possible reason for a decrease in stock value is poor financial performance, such as declining revenue or increased debt. This can lead investors to lose confidence in the company's ability to generate profits and pay dividends. Another factor that may contribute to a drop in stock price is negative news or events surrounding the company. This could include announcements of layoffs, product recalls, or regulatory issues. Such incidents can damage the company's reputation and erode investor trust. Additionally, changes in industry trends or market conditions can also impact a company's stock price. If a particular sector is experiencing a downturn, companies within that sector may see their stock prices decline as investors become risk-averse. Lastly, external factors such as economic downturns, interest rate changes, or global events can also affect the stock market and lead to a decrease in stock value. These factors are often beyond the control of individual companies, but can still have a significant impact on their stock performance. In summary, a decline in stock price is typically the result of a combination of internal and external factors that erode investor confidence and negatively impact the company's financial performance. Parsons Corporation market capitalization of $6 billion is materially smaller than most of its industry peers of roughly $10 billion. Parsons Corporation trades at a higher price-to-earnings ratio of 28 times and a lower price-to-book ratio of 2.45 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 54% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. Parsons Corporation's net income and profit margins underwent significant changes between 2023 and 2025. The company's net income increased from $161 million in 2023 to $235 million in 2024, representing a growth rate of 46%. However, the net income margin decreased slightly from 2.96% in 2023 to 3.69% in 2024. Despite the decrease in revenue from 2024 to 2025, the company's net income continued to grow, reaching $241 million in 2025. This indicates that Parsons Corporation was able to maintain its profitability despite a decline in revenue. The increase in net income can be attributed to the company's ability to manage costs and optimize its operations. The growth in net income was driven by an increase in critical infrastructure revenue, which rose from $2.422 billion in 2023 to $3.143 billion in 2025. This segment accounted for a significant portion of the company's revenue, indicating that it played a crucial role in driving Parsons Corporation's financial performance. The merger agreement with Altamira Technologies Corporation may have implications for the company's financial performance and strategic direction. However, the impact of this acquisition on the company's net income and profit margins remains to be seen. Overall, Parsons Corporation's financial performance suggests that it is well-positioned for future growth and success. The company's financial performance is a testament to its ability to generate significant operating cash flow. According to the extracted summaries, the company has consistently produced positive operating cash flow over the past 3 years. The data provided in the table supports this claim, showing net cash provided by operating activities of $478 million, $523 million, and $408 million for 2025, 2024, and 2023 respectively. This trend is a clear indication that the company's operations are generating sufficient funds to cover its expenses and investments. The positive operating cash flow is a crucial aspect of any business, as it enables companies to invest in growth initiatives, pay off debts, and maintain financial stability. In this case, the company's ability to generate positive operating cash flow suggests that it is well-positioned for future success. The company's debt level and interest expenses have undergone significant fluctuations over the past year. On one hand, total interest expenses decreased by 16.7% on page 74, while interest expenses also saw a decrease of $279,000 on page 72. However, this trend is not consistent across all pages, as interest expense increased by 63.8% on page 75, and by $4,270 from $40,154 in 2024 to $44,424 in 2025 on page 76. The decrease in interest rate from 5.6% to 4.8% on page 88 is also a contributing factor to the changes in debt level or interest expenses. Furthermore, the company's total revenues saw an increase of $386 million from $6.75 billion in 2024 to $6.364 billion in 2025, but interest expenses are not explicitly mentioned on this page. Overall, while there is evidence that debt level or interest expenses have changed significantly in some cases, the changes are not consistent across all pages and may be influenced by various factors such as interest rate changes and debt repurchases. The company's performance can be summarized as follows. The Federal Solutions segment and national security operations performed well, with notable projects such as the Tacoma Narrows Bridge and Gordie Howe International Bridge. Additionally, the High Consequence Missions segment excelled, showcasing capabilities across electronic warfare, multi-domain operations, mission support, and national to tactical operations. The company's cyber solutions and products also performed well, augmenting and automating full-spectrum cyber operations. The EASE business unit, focusing on advanced technology services for complex energy and chemical systems, aviation, life sciences, and biosurveillance systems, was another strong performer. Geographically, the North America, INFNA business unit, EMEA region, Los Angeles International Airport, Honolulu International Airport, New York MTA Systems, Dubai, and Riyadh all performed well. In contrast, the Federal Solutions segment experienced a decline in revenue, with a 19.6% decrease from $4,007,114 to $3,220,797. This was accompanied by a 32.3% decrease in adjusted EBITDA attributable to Parsons Corporation. However, there is no clear indication of poor performance for the adjusted EBITDA attributable to non-controlling interests, which increased from $56,714 in 2024 to $68,084 in 2025. The critical infrastructure segment showed growth, with revenue increasing from $2.42 billion in 2023 to $3.14 billion in 2025, driven by growth in the North America and Europe, Middle East, and Africa segments. Overall, while some segments experienced decline, others demonstrated significant growth and success. Management is optimistic about the company's outlook, citing steady revenue growth over the past few years. The company has seen a significant increase in critical infrastructure revenue, which now accounts for a substantial portion of total revenue. This trend suggests that Parsons Corporation is well positioned to capitalize on growing demand for infrastructure services. The management's strategy appears to be focused on expanding its presence in the critical infrastructure segment, as evidenced by the recent merger agreement with Altamira Technologies Corporation. This acquisition is expected to enhance the company's capabilities and increase its competitiveness in the market. While there are some areas of concern, such as the decline in Federal Solutions revenue and the decrease in net income compared to revenue growth, management remains confident about the company's prospects. The strong cash flow from operations and the ability to generate significant cash inflows from convertible bond transactions are seen as positive indicators of the company's financial health. Overall, Parsons Corporation's management is projecting a favorable outlook for the company, driven by its growing presence in the critical infrastructure segment and its expanding capabilities through strategic acquisitions. The company's financial activities have been notable in recent years. One significant aspect is its dividend payments. The performance graph description explicitly mentions the reinvestment of dividends, indicating that the company has indeed paid out dividends to its shareholders. In addition to paying dividends, the company has also engaged in share buybacks. According to the provided information, as of December 31, 2025, the company had spent a substantial $204.7 million on repurchasing shares under its share buyback plan. This demonstrates the company's commitment to returning value to its shareholders through both dividend payments and strategic share purchases. Supply chain disruption looms large. The current economic landscape is fraught with potential risks that could disrupt the smooth functioning of global supply chains. One such concern is the threat of supply chain disruption itself. According to recent reports, there is a high likelihood of supply chain disruption occurring due to various factors. Inflation risk, tariffs, and regional turmoil are some of the key drivers behind this concern. These factors can lead to delays, shortages, and increased costs, ultimately affecting businesses and consumers alike. The potential consequences of such disruptions cannot be overstated, as they can have far-reaching impacts on the economy and global trade. To mitigate these risks, it is essential for companies and governments to work together to identify potential vulnerabilities in their supply chains and develop strategies to address them. This may involve diversifying suppliers, investing in logistics and transportation infrastructure, and implementing risk management protocols. By taking proactive steps, we can minimize the likelihood of supply chain disruption and ensure that global trade continues to flow smoothly. That concludes the financial summary for Parsons Corporation. Feel free to comment below, and I will be happy to answer them when possible.